right now. I'm gonna put it on right now. All right, 35 people on the call and we are ready to run. 35 people on the call and we won't wait for the rest. We'll just go straight ahead. 4 more. 3 more. And we're ready to go. 3 more, then we are ready to go. 3 more, then we're ready to go. That's it. Target hit. We have trading target. We're going. Okay, so let me open my chart. Okay, so we're going. We're going again, right where we stopped. Right where we stopped, we're going again. So before I close the call, I said this is the last red candlestick where the institutions decided to do a sell to deceive all people. Wow, I was removed from the Zoom call. Oh, come on, nobody removed you. Sorry, I didn't remove you. Sorry, Donny. All right, so just like I said, this is the last red candlestick where the institutions or the big banks decided to do a sell before the buys. Hence, if price come back there, we are expecting the institutions to close at break even, take out their money, giving the buyers more power to push price up. If what I've just said makes sense, give me a 1 in the chat box, then I can go ahead. I want to refresh everybody before we go on. If what I've just said, what I've just explained makes sense, give me a 1 in the chat box, then I can go ahead. Yes. I need more ones. I need more ones. I'm not leaving anybody behind. I'm not leaving anybody behind. It is a basic education, a basic training. So I want to make sure everybody gets it. Come on, give me the ones. Yes. Fabulous. Okay, so I am gonna go. Thank you guys. Thank you guys for showing me your hair. So this being the last red candlestick. Now on the daily basics, we are expecting price to start reversing right here, which could potentially happen this week. It could potentially happen this week. So I am gonna make this setup clear enough, then everybody can take note of it. Get ready for this setup. If you are ready for this setup, give me a fire in the chat box. It is a setup that could potentially happen this week. Come on, give me some fire. Come on, I need more fires. I need more fires in the chat box. It is a setup that can potentially play out next week. We can take it. And if I should show you what is about to happen, you would be marveled. Come on. Thank you guys. We are all in this together. I can feel the fire right here. Okay. So literally all I'm gonna do is I'm gonna open my chart as clear as possible to see what price is doing right now. We are almost arriving to the candlestick. We're almost arriving into that candlestick. So I'm gonna take my Fibonacci retracement tool and measure from the wick of that institutional candlestick to the base body of that institutional candlestick. And I am going to mark out my 50% on my Fibonacci retracement tool. If you look on my Fib, 50% is red, 71% is red. It is my entry targets, hence why they are red. So I am going to put my line right here, my target entry zone right there. What I did was from the wick of the institutional candlestick, I flipped from the wick all the way to the base body of that institutional candlestick, and then I have marked the 50% of that institutional candlestick. That's all I've done. That is all I have done. I can see you all on fire. Oh, Nana, it looks like it. I am happy when I start seeing setups on my trainings. I am so happy to see setups on my trainings. So look, I flipped the wick of the institutional candlestick to the base of the institutional candlestick. And then the 50% of it is where I am looking to enter this trade right here. So if I should show you that my entry is going to be at 129.015, you see how round the figure is. 129.015. Look at how round the figure is. This is telling you something. Just the figure itself is telling you something. The banks are going to respect this figure. They know why they left their money sitting right there at that figure. It is not coincidence. I just looked at the Fibonacci retracement too. I just looked at the institutional candlestick, measured it with my Fibonacci retracement tool, took out the 50% and look at the number. What does it tell you? What does the number tell you? In the chat box, give me what this number, the significance of that number, what it's telling you, how round it is. In the chat box, whatever that means to you, just give me in the chat box. Anybody has an idea? Anybody has an idea? Can you please repeat? Banks really have measured things. Yes, they do measure things. Psychological level. Thank you, Dan. Psychological level. So the level, the number being a round figure, no idea. No idea. No problem. I am going to explain. I am going to explain. Sorry. If you go to the shop, the banks understand this psychological level. Thank you, Dennis. When you go to the shop and you're going to buy something, have you realized that all the time they are only reducing the price 85p, 75p, 55p, 20p, 1 pound 20, 1 pound 50, and they are not always saying 1 pound 18. How many times do you see 1 pound 18 at the shop? How to get the 50%. All right, how to get the 50%. I am going to go over it again. But then the question is, how many times do you see 1 pound 18 at the shop? Almost never. Yes. Why? Because we don't respect those numbers. But then if I see 1 pound 15, we see it all the time. 1 pound 20, 1 pound 50, we see it all the time. And that is exactly what these banks do. They look at these numbers and they appreciate that number. They appreciate that number. That is where they want to place their trades. They target those numbers, and that is exactly where they want to place their trade. So yeah, how to get the 50%. Okay, so what I did was literally, I identified the institutional candlestick, which I did with you all. We identified it. I took my Fibonacci retracement tool, and I measured from the wick of that institutional candlestick to the base body. The base body, look. The base body of the institutional candlestick. This is the body, and that is the base body of the institutional candlestick. And I took the 50% on my Fibonacci retracement to 0.5. Is that clear? Is that clear, Cal? Does that make sense? Cal, please answer me and let's go forward. I just want everybody to understand this. That's the reason why I've taken the time to come back again. Thank you very much. Good. So literally, the fib from the upper body, upper wick, to the lower base body of the institutional candlestick, and the 50% is my entry for this trade. I am going to put the trade right there. So as the week is about to start, we already have a setup. And guess what? With smart money trading, one good thing about this is you can reduce your risk as much as possible. You can reduce your risk as much as possible. So my entry is right there, and my stop loss is only going to be just around this area. So if we should measure it, we're taking a trade on the daily time frame, and our stop loss is what? 169. I am going to reduce this stop loss, and I'm going to show you how we can reduce it as much as possible. Good. So now we're going to go all the way on the 4 hour. That's where we came from, by the way. 4 hour, that's where we came from. But then I want you to take note of that number that I marked. If we should get this trade to play, our target, just like I said to you, the liquidity we have up here is our target. That is what we want to clear. And guess what? We're coming all the way into the next institutional candlestick. So our risk to reward ratio is 1:8.5. 1:8.5 if we get this setup to play. So you can take this trade for the whole week, and my brother, my sister, you just don't want to trade again. You're done. 8% increase in your account. You are done. You are done. This is what smart money gives you. This is the concept of smart money. 1:8 trade is what you'll be looking at. Okay, so now on the 4 hour, get set up, Lenny. All right. We haven't seen nothing yet. On the 4 hour, let's look at the area. Let's look at the area that we've just marked. You see where we have our entry. Do we see the significance of all these wicks around this area? For a retail trader, what does this mean to you? The wicks that you have around this area, for a retail trader, anybody in the chat box, what does this wicks we have here, so many wicks we have in this area, what does it mean to you? Anybody in the chat box? Anybody in the chat box? Anybody in the chat box? We have 1, 2, 3, 4 wicks. Rejection. Thank you. Rejection. Market is moving sideways. Thank you. It is right. Bullish rejection. Thank you. So price is just rejecting around this area. Hence, if we're coming back there again, we are looking for price to do what? Give us a rejection on the other side. I hope that makes sense. Give me a 1 in the chat box if that makes sense. Give me a 1 in the chat box if that makes sense. The bullish rejection that we had on the 23rd of March, 2020, now we are coming back to that same area, and we are going to expect a bearish rejection in that same area. You lost me at the part. Okay, you lost me at the part. Okay, let's go back. We marked out this line. We marked out this line. We marked out this line, 129.015. We marked this line right here on our daily chart. And we came on the 4 hour, then we're starting to see that price was being rejected in this area. 1, 2, 3, 4, 5, 6, 7, 8, before they were able to break it. On the 20th, that was on the 23rd of March, 2020. And look at the time. Take very close note of these times. Look at the time. Look at the time. 1 o'clock, New York market. And look at the time that we got the broken. 5 p.m. New York market. I want you to take note of the markets. You are looking for a bullish rejection in order to get an uptrend, which leads to an institutional candlestick. Thank you very much, Daniel. Thank you very much. That's exactly what I'm expecting. So we got this bullish rejection right here, but then we broke that rejection and look at the time, 5 p.m. London, New York session. And look, price is already coming into this area. I'm expecting price to reach this area on Monday by London market open or in the afternoon, 1 p.m. in the afternoon, New York opening. I want us to take very close note of this time. If London open, we get this trade to trigger, we are going to take this trade full on. We are going to take it with whatever lot size you want, because I am happy to take that trade. I am happy to take that trade for that rejection. If we get it in the New York, I am going to take it. If we get it in the Asian, please stay away from this setup. If we get it in the Asian, stay away from this setup. I know why I'm saying that, and I'll explain it as we go down. I'll explain it as we go down. So now we can clearly see that on the 4-hour, we have the wick rejections on the bullish side. Can we say, I'm going to take this off now. Can we say that this area, there is an imbalance in price? Give me a 1 in the chat box if you see the imbalance in price. Thank you. Thank you, Georgia. That's it. That's it. That's it. So this area, there is an imbalance in price on the 4-hour. Let's make the color blue. Blue, 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 blue. So we have an imbalance in price right here. And look where our entry is sitting. Now I am going to reduce our chart. We're going to go on the 1-hour time frame to look closely at what is happening in the market. On the upside, everything looks pretty balanced in this area. Can I say, except this area? Except this area, we don't see a really balanced area in this area. Can we say that? Give me a 2 in the chat box if you can see what I've just done. There is an imbalance in price right here. Look at that wick. It's not touching that wick. We tried to come into that imbalance. We failed it, but we did not fill it wholly. Good. And look, what is sitting right there is an institutional candlestick sitting right here. Institutional candlestick sitting right here. Good. So this tells us that this area that we have marked is a very hot cake area. When price comes there, we want to see what price is going to do. Now let's go back. Let's go back to the area we are focusing, the setup that we are focusing to take. Sorry, my computer is quite slow. See, on the 1-hour, we see every single thing right here as balanced, right? Look at the way the wicks are touching each other nicely. Let's make it big and clear. Look, on the 1-hour, this is the area we marked. The blue line right here, we marked on the 4-hour. The blue line we marked here on the 4-hour. Look, in this area that we marked, there is lots of balance in this area. Can everybody see that? Give me a 1 if you can see that. Give me a 1 if you can see that. Brilliant. But then what we can see is an institutional candlestick sitting right here. Is there a tiny imbalance there? Yes, there is a tiny imbalance sitting right here. I know where you're looking at, Chris. I know where you're looking at, right here. This tiny imbalance right here. Exactly where we marked our entry. But now I am going to prioritize this entry right here. At this institutional candlestick, I am going to prioritize this entry right here because there is an imbalance. And the reason why I am going to prioritize this area, I just want to explain it quickly. If you go to the market, yeah, and you want to buy a cup, and then the cup, you saw a 50% off and you saw a 90% off. Which one are you going to buy? In the chat box. 50% off, 90% off. Which one are you going to buy? In the chat box, please. Put your answers in the chat box. Thank you. In as much as these banks has got lots of money, they always want to buy when it's cheap. Even the banks that has got all our monies, they always want to buy when it's cheap. And the same way, we want to buy when it's cheaper. Hence why I want to take my trade. I want to take my trade when it is as cheap as possible. When it's as cheap as possible. Even though I see an imbalance right there, I see an imbalance right there, right here, where I put my daily entry at. I see an imbalance. But then in price, this price is higher compared to this one. So we would want to buy as cheaper as possible. Hence, I'm going to take this off. I'm going to clear all these lines we saw on the daily. Now we're squeezing in onto our entry and making our entry as refined as possible so that we can reduce our stop loss. If I should take the trade from here, my stop loss is going to be 43 pips. 43 pips stop loss. On the daily, we had our stop loss as 169, if anybody remember. So now we're going to go on a 30 minutes time frame. On the 30 minutes time frame, let's look on the buy side. On the buy side, if there is any sort of institutional candlestick, there is an institutional candlestick right here. So this is what I do as a smart money trader. I'm going to mark my institutional candlesticks. There is a gap right here, an imbalance sitting right there. And look, I just want to show you an example of what price did. Example of what price done when it comes into an institutional candlestick. Just want to show you a quick example, then we can move on. A quick example. Can you see this last red candlestick right here? This is what I want to show you the market does all the time. Look at the way price came all the way into that last red candlestick and straight away it gave us a buy. So if you had bought from here, that is just an easy 100 pips. This is just the concept that I'm teaching you. Easy 100 pips, and your stop loss would have been right there. Your entry could have been here, and your stop loss could have been just there. Look, 1:4 trade. This is the setups that I'm talking about. Your stop loss is as small as possible, but then you're going for big profits. The stop loss is 22 pips, and your profit is 90, 100 pips. These are the setups that I'm talking about with smart money. Look at the way here we saw a gap right here on the 1 hour. We came all the way back into the gap, filled the gap, and price dropped. The same thing we want to see when price gets back into the zone that we are looking at currently. I'm going to squeeze in. It looks like I'm talking too much right now. Let's make it as quick as possible. On the 30-minute, the area that I've marked, I can make it even as small as possible. I can make it as small as possible. Can I move my entry to this area and call this an institutional candlestick instead? Give me a 3 in the chat box if I can do that. If you understand why I'm doing that. A 3 in the chat box. If not, I'll explain it. Then we're done. Then we're done from here. Good. 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 So now we are as close as at the bottom as possible. And everything at the bottom is pretty balanced except the imbalance we have right here. All right. Somebody says no. Please explain why. All right, the reason why I am going to consider this as an institutional candlestick is because it's the last red candlestick before the up move. Look, the last red candlestick before the up move. On the 30-minute is the last red candlestick before the up move. And I have got an imbalance sitting right in front of it. Look. Because of how fast the institutions want to go away from here, they created an imbalance in the market telling you that they were here. I hope that makes sense. Georgia says it makes sense. How about Danny? Does it make sense? Please, Danny, give me an answer if that makes sense. No. All right. So before the institutions decided, everybody pardon us. I want Danny to understand and we can move on. Before the institutions decided to go into a bullish trend, can I say price was only consolidating in this area? Yeah, price was only consolidating in this area. But then when they decided to move to the upside, they created a candlestick. They sold right here, and then they pushed price up, creating an institutional candlestick right here. So the last red candlestick before the up move, before the uptrend. Does that make sense, Danny? Does that make sense, Danny? Last red candlestick before the bullish trend. Exactly what I'm trying to say. So the last red candlestick before the bullish trend. Exactly what I'm trying to say. So now our entry is right here, and our stop loss is at the bottom right here. Now let's reset and finish with the chart, finish with our trades, then we can go away from here. So this week, potentially we can place this trade. Sorry, I'm slow. I'm slow, people. Slow and steady wins the race. All right, Danny, no problem at all. We got you. So we have our stop loss sitting right here, and our trade is sitting right there, staring into our face. Sitting right there, staring into our face. And if we pick up this trade, TP1 is going to be here. TP2 is going to be there. TP3 we want to be going all the way above there. There is an institutional candlestick sitting right here. So our TP3 could be here. TP4 could be let's go on the 4-hour. It will be clearer. So our target, Danny raised the hand. Our target is all the way up there. This is the trade that we have. This is the trade that we have. If price decided to come back into this institutional candlestick. So our ratio is 1:25. just everyone has their own pace. No problem. Yeah. Don't watch that, Danny. I'm a slow learner as well. All right. You just having your own little charts right there. This is the setup that we have. Does everything that I've gone through make sense up to when I ended up with a setup? If it does make sense to you, give me a 5 in the chat box. A 5 in the chat box. How I ended up seeing my setup. Maybe a silly question, but would you consider high drawdowns? No, I will not consider high drawdowns. I'm only risking 32 pips on this trade. And if I should even go on a 1 minute time frame, I could find a trade with even five pip stop loss. Good. I could find a trade with even 5 minute stop loss. Let's try and see if I can refine this even better. And if I'm done with this, I'm going to explain it to you. The reason why I'm not going to consider. This is also Jay. Let's see if we can see something on the 15 minutes. In that same area that I've marked on the 15 minutes, let's see if we can even reduce our stop loss further. Yeah, on the 5 minutes is the same institute. On the 15 minutes is the same institutional candlestick as the 30 minute. So yeah, I'm just going to leave this as a setup. I'm happy to take 30 pips risk. I'm happy to take 30 pips risk to make I can't even measure the paper. I can't even see everything on the screen. How much I could be making if this trade plays. To make 778 pips. Who asked the question again? Five, I need you to over the setup again. You need me to go over the setup again. All right, sniper entry, exactly. All we want to see right here is just a wick. We want price to come back in here over a period of, over a period. Anybody asking a question, you can just unmute yourself and then ask the question, please. We have 3 minutes. Any other question, just unmute yourself and let's talk. Yes, it is over a period of time because we're not expecting to see 700 pips move in 1 week. Possibly with GBP, JPY, it is possible. It is possible. And one more confirmation. If I should put my fib right here, look at the extension level that I'm having. Where my entry is sitting, look at the extension level that I'm getting. So this is a potential cipher pattern I am about to see right now, GBP, JPY. A potential cipher pattern X to A, A to B for anybody that trades harmonics. Confirmation, an extra confirmation to our trade. Does anybody have a question? Feel free and ask the question, or else I think we're done. So this is our setup. If anybody wants me to copy the setup for them, I can do so. Give me a 1 in the chat box if you want me to copy the setup for you. All right. I'm going to put in the link. Cipher is upside down. Would you please share the recording? Yes, I will share the recording, Coffee. Thank you. I will. So I've put the setup in the chat box. You can just copy the link and keep it wherever you want to keep it. So now, if there is no more questions and everybody's happy with what I've just done, I'd like to say a big thank you to everybody that jumped on onto this call. And then we shall meet again on Smart Money Concept Basics. Thank you, everyone. We're done. Yes, if you've got any questions in the future, just message in the group, Francis, and I'll just reply you as soon as possible. Where is the link? The link is somewhere in the chat, please. You're welcome, everybody. You're welcome. You're welcome. You're welcome. Catch you another time. Peace out.